Dan Dolev, who's back with us to figure out the numbers and if they can buck the trend from this morning, which is a lot of red. Dan is a senior analyst in payments and business services at Macquarie. Dan, great to have you back on the show. So this is Cash App or just general payments growth for Square? What's driving it this time?
Hey, Oliver, great being on your show as always. This is the quarter we've all been waiting for, right? This is the turning point of Square. It's not just the Cash App. It's not just the seller ecosystem. It's everything that's, firing on all cylinders right now. And I think that's what investors are realizing this morning. Plus, with 95% U.S. exposure and very little exposure to cross-border volumes, this is the stock to own when the coronavirus hits. Like in our note, we said this is immune to the coronavirus.
This is a pretty interesting point because we've seen some pretty interesting responses by the market to this. Not only are they buying up drug makers, but they're buying up things like conference call stocks like Zoom, Clorox. You think Square will kind of become like a safety trade given that it doesn't really require, aren't people supposed to go out and use merchants that have Square and stuff?
True, but they're under indexed to tourism. Remember, the big issue with the coronavirus has been tourism and cross-border. And if you think about Square, the essential sellers for Square, those are the coffee shops downstairs and the small merchants. And those are unlikely to get affected, at least not immediately. Now, if we get corona in the US, that's a different story. But as long as this is limited to travel, they're very, very underexposed to that. And that's what I'm saying. That's this stock to own ahead of the coronavirus or in the coronavirus.
Cash App's got a pretty nice margin on it, $144 million in profit, $361 million of revenue, and a ton of users, 24 million, which is up 60% from a year ago. So Dan, your point is, hey, everything's working together. What's the big workhorse for the bottom line?
For the bottom line, the big workhorse is if they continue to actually get more of the users to be more and more engaged. If you think about it, the vast majority of the revenue today from the Cash App are still from instant deposits. They charge money for people to actually deposit their money into their bank account immediately. If they get those users to use more and more trading, which they've mentioned has been doing really, really well, and engage in other activities on the Cash App, plus potentially becoming more of a neobank on the Cash App, that's the big mover on the bottom line. Right now, their average revenue per user is $30. That's up from $15 only 2 years ago. So that's a massive improvement, and I see them shrinking the losses on the Cash App and becoming more and more profitable over time.
Okay, so then the kind of new incremental bottom line growth story, we know that they've got a lot on the Cash App. They introduced trading, they've got the Bitcoin stuff, the competition with Venmo, where Venmo started charging for immediate payout if you want for a small percentage. How are they going to continue to make money on it? Are these the ways they're going to continue to make money, or do they have more tricks up their sleeve?
100%. So other than the neobank stuff, just simply raising pricing. So we've done actually a survey last month that shows that they could raise the instant deposit fee for up to almost 2.5%. Right now they charge 1.5%. So the reception on the consumer side to that would be almost zero. So there will be no loss of consumers or no loss of interest if they actually raise the prices. And that we've actually backed it with a survey over 200 Cash App users. So they've got lots of tricks up their sleeves. And this is a real business. This is not just a trick. This is a real business, and this is sort of the ultimate neobank, if you like, with a call option to become a third network, which is the Cash App on the one side and the sellers on the other side, and then basically connecting with each other, right? With 24 million users, active users, this is a serious business right now. So I think this is just the beginning of a great year for Square as more and more things come together.
In the past, they had seen some choppiness around reports due to gross payment volume growth rates that had stagnated a few times. Overall, the top line growth at about 41% this quarter is obviously nothing to bat an eye at. But again, about a year ago, it was 50%, to 51. Are we going to continue to see declining top line numbers or slowing top line growth numbers? Or is there potential for them to start pulling that up as well?
Yeah, actually, that's a great question, Oliver. So our thesis has always been that they're going to reaccelerate revenue. And I'm focused on revenue because if you think about it, GPV is important, gross payment volume is important, but monetization is more important than GPV.
Yeah.
If you think about the guidance, last quarter they said they're going to do low 30s. This quarter, for 2020, this quarter at the midpoint, they're already saying they're going to do 33. And guess what? Revenue growth, right? Revenue growth. And guess what? Ex caviar. For Q1 2020, they're guiding to 45 at the midpoint. So they're basically telling you there's going to be a significant deceleration. I don't really see that deceleration happening, not at that rate. So that sets up for a great beat and raise year throughout the year. Their numbers are, or the expectations right now, what they're telling the market, are way below what they're actually going to do.
All right, big move for Square set up this morning, $82. Dan, nice coverage as always, sticking with the stock through its ups and downs. And this morning it's back up. Dan is a senior analyst, payments and business services. He's at Macquarie now. Good to have you as always.